The story of the Great Economic Depression is not just a tale of numbers, charts, or failed banks, but a human story of fear, hope, collapse, and rebirth. Imagine a world where confidence suddenly disappears, where the things people believed were strong start breaking one after another, where ordinary families wake up to find that their savings are gone, their jobs vanished, and their future uncertain. To understand the Great Depression, we have to step back into a time when the world was changing faster than ever before. The 1920s, known as the Roaring Twenties, was a decade of excitement, energy, and unstoppable economic growth. People believed nothing could go wrong. Technology was booming, electricity was spreading to homes, cars were no longer luxury items. Ford's Model T had turned automobiles into something the average person could dream of. Radios brought entertainment and news directly into living rooms. Factories were producing goods at record speed. And the stock market, it was rising like a rocket. For millions of Americans, investing in the stock market became a lightning path to wealth. They believed prices would only go up, never down. People started borrowing money to invest. Banks encouraged it. Brokers encouraged it. And people who had never bought stocks before started buying shares with borrowed money, hoping to repay loans with profits. This created a bubble, a huge, fragile bubble built on dreams rather than reality. But like every bubble in history, it had a breaking point. As the 1920s progressed, production of goods kept increasing, but people's ability to buy them did not increase at the same pace. Factories were producing too much, and demand was slowly weakening. The imbalance was growing silently, but the biggest danger was that people ignored warning signs. They believed the good times would never end. And then came October 1929, a month that would be remembered forever. Small declines in stock prices made investors nervous. And once fear entered the market, panic spread like wildfire. In a few days, billions of dollars vanished. People rushed to sell shares, but there were no buyers. Prices collapsed. Brokers demanded money from people who had borrowed to invest, but they didn't have enough. The fall was unstoppable. The bubble burst. What followed was not just a market crash, but a chain reaction that spread through the entire economy. Banks had lent huge amounts to investors. When investments failed, banks became weak. Depositors, afraid of losing their savings, lined up outside banks, demanding their money. This phenomenon was called a bank run. And since banks kept only small amounts of cash in their vaults, many collapsed within days. As banks failed, businesses lost access to loans. Without money, factories could not buy raw materials. Companies could not pay workers. People lost jobs. As millions of people lost their jobs, they stopped buying goods. When people stopped buying, companies made fewer products. When companies made fewer products, more workers were fired. This cycle of job loss and reduced spending deepened the crisis. By 1933, unemployment in the United States reached almost 25%. That means 1 in every 4 working people had no job. Families who once dreamed of prosperity were now struggling for basic survival. Many people who once lived comfortably were suddenly standing in long bread lines, waiting for free food. Farmers suffered terribly too. Prices of crops fell so low that growing food became unprofitable. Some farmers dumped milk in rivers because selling it brought almost no money. The crisis wasn't limited to the United States. It spread across the globe. International trade collapsed. Countries raised tariffs to protect themselves, but this only made the situation worse. Goods were produced, but not sold. Factories stood quiet. Ships that once carried goods between continents sat idle in ports. The Great Depression changed politics too. Desperate for solutions, people started supporting leaders who promised strong action. Some countries turned toward authoritarian rule. The economic pain of the 1930s shaped the world in ways that ultimately contributed to the rise of tensions that led to World War II. In the U.S., President Herbert Hoover believed the economy would fix itself, but the crisis was too deep, too widespread. By 1932, people lost confidence in his approach, and elected Franklin D. Roosevelt, who brought a radically different plan, the New Deal. The New Deal wasn't just a policy, it was hope. It brought new laws, new institutions, and new protections. It created jobs through large public projects, bridges, dams, roads, parks. It introduced rules to prevent banks from gambling with depositors' money. It set up social safety nets so that elderly people, unemployed workers, and poor families had some support. Slowly, confidence began to return. People began to believe in the future again. The economy did not recover overnight. It took years, but the downward collapse finally stopped. One of the biggest lessons of the Great Depression was the importance of psychological confidence. When people lose trust in the system, banks, businesses, investments, everything starts breaking down, no matter how strong the financial structures look from the outside. The Great Depression taught economists and leaders that markets need rules, oversight, and safety nets. It taught the world that speculation without control is dangerous. It showed how deeply connected the global economy is, how a crisis in one country can spread to others. But it also revealed something powerful about human resilience. Even in the darkest times, societies can rebuild, reinvent, and recover. Behind the statistics were real human stories. Families selling furniture to pay rent, children leaving school to support their parents, farmers watching their land dry up, workers walking miles hoping for small jobs, businessmen losing everything overnight, and communities coming together to help one another. The Great Depression shaped modern economic policies, influenced today's banking rules, and changed the structure of global finance. Whenever economists face a crisis today, whether the 2008 recession or the pandemic downturn, they look back at the lessons of the Great Depression. Because history doesn't just tell us what happened, it tells us why it happened and how not to repeat the same mistakes. The Great Depression remains one of the most important chapters in human economic history. It is a reminder that unchecked optimism can be as dangerous as fear, that economic stability is delicate, and that societies must always prepare for uncertainty. But it also reminds us that recovery is always possible. No matter how deep the fall, humanity finds a way to rise again. The Great Depression ended not with one magic solution, but through persistence, policy changes, innovation, global cooperation, and the resilience of millions of ordinary people. It is a story of destruction, but also rebirth. A story of collapse, but also courage. A story that continues to shape the world we live in today.